Hey guys, what's up? Alec back with the daily stock market, and look at that. SoFi is still down 7%, even though we see most stocks starting to bounce back today. Now, what we're going to be talking about is a deep dive onto a few different stocks. We're going to talk about 3 to 5 different stocks. And just so you can see what's going on in the markets today, we have SoFi down 7%, one of the biggest losers of the day. SNDL down, Neo down, Twitter's even down 5%. And you can see all the stocks are following the same pattern where it was a big downward movement on the day. And now we're seeing a little bit of a bounce back. By the way, if you don't have Webull yet, they're a great trading app and they're offering free stocks right now too. So message me on Instagram to use my link to sign up. But you can see it was kind of selling off. A lot of stocks were selling off. And then in the middle of the day, we started having a bounce back and all the stocks pretty much followed the same pattern. Here we can see Sulfite Technologies at an all-time low, all right, even lower than their IPO price. And you can see every time they hit an all-time low, they have like a little bit of a bounce back. Here you can see it. Here you can see it. Here you can see it. So if you're a short-term options trader, that could be a good idea. You also see 97 million volume traded on SoFi today. So needless to say, people are eating SoFi up right now. It's one of the most traded stocks in the stock markets. Before we do a deep dive into these different stocks, make sure you leave a thumbs up on this video if you appreciate the deep dives and comment below what you guys want to see next. So if we talk about what is Sulfite Technologies, because a lot of people don't even know, here you can actually see they provide financial services. It offers home loans, personal loans, in-school loans, and credit cards. SoFi Technology develops also non-lending financial products such as money management and investing product offerings. So basically, they do everything a normal bank could do, just like Chase, JPM, but they are online and they don't have a physical branch location that you can go into. So they're one of the first of these futuristic online banking services. Obviously, JPM and Wells Fargo, Bank of America, they could all transition into more of an online service, but that's what SoFi Technology really focuses on in their sector. Okay, so here we can see SoFi has become a high-profile tragedy of the early 2022 growth stock rut. The company's financials have never been stronger. This comes on the back of SoFi receiving regulatory approval to become a national bank. So that's some of the most bullish news about SoFi. They're basically a national bank. I do not see a quick reversal on the current torrid sentiments, but the long-term bull case remains. So that's very important to remember. Strong financials against a backdrop of crumbling growth sentiment. SoFi recently released its fiscal 2021 fourth quarter and year-end results, which saw a total net revenue for the quarter come in at 280 million, a 54% increase from the comparable year ago period, and a small beat on analyst consensus. This came despite an unexpected extension of the federal student loan payment in late December. Total revenue for 2021 came in at 1 billion, a 63% increase in revenue from fiscal year 2022, while adjusted EBITDA of 5 million remained positive for the sixth consecutive quarter. SoFi members also reached 3.46 million, an 87% year-over-year growth rate. So here you can kind of see the members growing quarter over quarter. It's just increasing, increasing, increasing. They also see the unparalleled growth in premium financial services with a 43% CAGR, compounding annual growth rate. SoFi expects revenue to grow at 43% from its 2020 baseline. This should see revenue accelerate to at least 3.6 billion in fiscal year 2025, which would be spectacular growth if you're a long-term holder. I expect this figure to be higher at 4 billion. This sets the tone for a long-term hold. SoFi's valuation makes sense against the wider context of its revenue ramp. And while controversy still surrounds the continued extension of the student loan, which everyone who has student loans knows what's going on. Joe Biden basically keeps extending it, so there's no interest, there's no payments, which is a good thing for people that are holding loans, but it's a bad thing for someone like a company like SoFi. It cannot be extended forever. All this is just hinting at SoFi currently consists of minimum 3-year hold minimum, and ideally a longer term 5-year hold period is required for the full value to be realized. Hence, I continue to add to my position as I move to reduce my dollar cost average, my cost average below $10 per share on SoFi. SoFi's growth continues, and the company will push itself into stronger profitability as its cost savings initiative is realized. So overall, I agree. If you can average your cost in $8 and get your average cost around $8 per share, and you plan on holding for 3 years or even 5 years, this is a stock that can have huge growth rates. If you get in at $8 and in the next 5 years it's $50-$60 per share, that could be close to around a 5x growth on something like SoFi. Needless to say, there's huge growth potential, but there's also more risk with something like SoFi. There's no guarantee that they're going to be the one to make it, but at the risk versus reward ratio at $8 per share, I would say it's heavily skewed on the reward side at this price point if you're a long-term investor. All right, so let's talk about Twitter. What's going on with Twitter? Now they're up 23% in the past week. We'll go over some price points where I'm looking to buy in at, where I'm looking to sell at. I have personally around $8,000 of Twitter. It's one of my biggest positions even before Elon Musk got on the board. I just saw it as a huge buying opportunity when I was making those lows under $35 per share. I'm also bullish on the app in general, in the whole finance space, in the crypto space, in the NFT space. It's pretty much the leading social media when it comes to business related social media, and also cryptocurrency NFT related social media. It's definitely the leader in that space. So I saw that coming from a mile away, but Elon becoming part owner, 9% stake, and also sitting on the board is also extremely bullish for Twitter, and I think it can go to new all-time highs in the next 12 to 24 months. So let's kind of dive a little bit deeper into it and see what's going on with Twitter and see when is a good time to buy. Honestly, I like buying under $50 per share for long term, but if you can get in under $45 and even under $40 per share, that's when you want to be buying the heaviest to get your dollar cost average as low as possible on Twitter. On my Robinhood account, I only have $1,000. We're up 18%. We have 22 shares at an average cost of $40 per share. You can see the market cap is 38 million. So Elon Musk could have easily bought the whole company if he wanted to, but it probably wasn't for sale to buy the whole company. If we look at the 52-week low, 52-week high, it's about double. The 52-week high is about double the price of the 52-week low. If we take a peek at what the volume's looking like, 100 million in volume. So just to give you some perspective, 100 million volume is obviously a lot. Everyone's talking about Twitter right now. Everyone's talking about Elon Musk. And SoFi, a stock that seems like a lot of people are not talking about, has 90 million volume. So these are both extremely high traded stocks. Twitter is a little bit more high profile, and SoFi is a little bit more low key. Okay, so if the first thing we look at is total revenue for Twitter from 2017 to 2021, we see some good things overall. Now, from 2016 to 2017, we saw a 3% decline in total revenue, and then we saw it go back up in 2018 to $3 billion, which was a 24% gain, and then we saw a 13% gain, a 7% gain, and then we saw a 36% gain with Twitter's revenue now at $5 billion. I think we'll see a large increase in total revenue with Twitter Blue is now a thing where people can pay more, super follows. All right, so there's a lot that has been done in just the last few months. Also with Elon Musk sitting on the board, I'm sure he'll think of a few creative ways as well. All right, now we saw Twitter doing a lot of weird things in the last 5 years. When it comes to net income, I would give their net income a way lower score than their total revenue. Their net income is just so wishy-washy. Some years they're doing 1.2 billion, 1.4 billion in 2018 and 2019, and then in 2020, all right, we saw a huge difference, all right, from positive 1.4 billion to negative 1.1 billion losing. They lost money. And in 2021, they didn't even become a profitable company for the entire year. All right. Now they're making their way closer to profitability again. And if they can get on track, with those new revenue streams, Twitter Blue, and other things that they're offering to make more profits, I think that's going to be a good thing for Twitter over the next 3 to 5 years. If we take a look at their balance sheet, we can also see that their assets are a lot higher than their liabilities. However, I like to see that debt to asset ratio closer to under 30%. Under 50% is still a good thing to have on a company. So their balance sheet gets a C plus, their net income gets a D minus, their total revenue gets about a B or a B plus. Now, if we can see what else is going on with Twitter, we can see that the online sentiment is very bullish. All right, 70% bullish. Hedge fund activity in the last quarter, we've seen a decrease in 17 million shares in hedge fund activity. Insider activity, we've seen $2 billion, $2.9 billion in the last 3 months, which could be Elon Musk, because remember, he put $3 billion in. However, if that's not including Elon Musk, then it would be interesting to see where else that insider activity is coming from. All right, we also see a positive sentiment. We see news sentiment in the last 7 days has been bullish. And a lot of this stuff hasn't even been updated yet since Elon Musk did that huge thing. But obviously, he owns 9% of the company now. So we'll definitely have to revisit Twitter in a few weeks once we get more analyst estimates and everything coming in now that Elon Musk is on the board. However, I already went over the price point where I'm looking to buy at, and I'm looking to sell above $65 per share for majority of my shares, and probably 50% to 40%. I'm just looking to hold long term on Twitter because I think they're going to be a more powerful social media in the next 3 years. All right, and the last one that we'll be talking about today is going to be Robinhood. All right, they're only down 2% today, but they were as low as 7.5% down. All right, and they're pretty much at an all-time low right now. When they IPO'd, it was around $38 per share. They went as high as basically $70 per share. I'm sure some people bought around $50, $60, $70 per share, and then it's just been 80% losses, 82% losses from their all-time high. So needless to say, that's why a lot of people have a bad taste in their mouth for Robinhood. If you look at actually when Facebook IPO'd, they had a very similar IPO. They IPO'd and they went up and they went down like 50%. And obviously, Facebook is one of the most successful companies today, but not saying that that's going to happen with Robinhood. It's just something to think about. There's obviously extreme risks with Robinhood. There's no guarantee that they're going to be making it in the space. But in my opinion, the risk versus reward is kind of like SoFi right now. If you can get in at around $10 per share, I personally, that's where I'm buying. I'm trying to get my average cost as close to 10 or under 10. I'm even waiting for new all-time lows for under 10 for Robinhood because I think they'll be a good one to hold on to for a few years, and they can have a good comeback story, I think, as well. Also, the volume's a little bit lower than the average volume. The market cap is only $10 billion, so Elon Musk or whoever could come in and acquire Robinhood like in a snap of a fingers. Even if like Fidelity wanted to, or a bigger Charles Schwab, for example, there's a good chance that they'll just swallow up Robinhood and rebrand Robinhood, make them a way better company than they are right now. So what we'll see is Bitcoin Lightning Network also strikes Robinhood wallets. So Robinhood is working on a lot of good things. I don't think they're going to be going anywhere in the next few years. And if they do get acquired from something like Charles Schwab, that's honestly a good thing. And that would be super bullish for all Robinhood users and all Robinhood holders. All right, so they are using Bitcoin wallets now. I was actually checking myself. You can transfer Bitcoin in and out of Robinhood, which is a game changer. And they're probably also going to be adding Shiba soon, which nowadays Shiba's pretty much old news. So I think Robinhood should have done that months ago, and it would have been a lot better play for Robinhood. Robinhood has crashed 87% from all-time highs and is now down over 70% from its IPO price. Revenues have begun to decline and user growth has stalled. The risks are numerous, but the company has $6.2 billion in net cash on the balance sheet, making up for 68% of the market cap. In today's increasingly retail invested influenced market, Robinhood would seem like a fan favorite. Instead, recent months have seen formerly favored stock sell off heavily. Hood, for its part, has sold off nearly 90% from all-time highs. The stock has sold off so much that the net cash makes up for 60% of the market cap. The stock is presenting sustainable upside if the company can fix its recent issues with user growth, and the large cash balance helps to moderate the risk. I rate shares a buy, but note the elevated risk here. So you have to understand there is a lot of risk with Robinhood. Hood priced its IPO at $38 per share in August last year, peaked at $85, but now finds itself at $10 per share. Some key metrics for Robinhood: it hasn't been uncommon for newly public SPACs to report disappointing numbers, but Hood's numbers after coming public, the normal route, have been equally disappointing. Revenue growth has almost disappeared after soaring earlier in the year, and here you can kind of see that. Because Hood makes a sustainable portion of its revenue based on transactions, its business can fluctuate substantially based on volatility presented in the broader markets. For reference, Hood grew accounts from 9.8 million in the second quarter of 2020 to 22 million in the second quarter of 2021. Hood has also seen its monthly active users decline sequentially for the second straight quarter in a row. Why has this happened? There's no shortage of potential explanations. Is it because of a tarnishing reputation from AMC and GameStop frenzy last year? Is it due to the never-ending negative publicity regarding Hood's IPO? Is it due to the never-ending negative publicity regarding Hood's potential impact on millennial investing practices? It may be difficult to fix the reputation, and there are many competitive brokerage firms which offer commission-free trading. Investors hoping for Hood to quickly return to triple digits revenue growth posted just 2 quarters ago now need to understand that user growth must return for that to happen on a sustainable bias. Honestly, what I think is going on is just there's less interest in stock market trading overall in the last 3 to 4 months, just because, it hasn't been on fire like it was in 2021. 2021, the stock market was on fire. Everybody wanted to join. And also the issue with Hood also, you have Webull now. You have a bunch of, Fidelity, M1 Finance. There's so many other brokerages nowadays to go with that do commission-free trading. In the beginning, Robinhood was one of the only commission-free trading platforms out there, and then all the other brokerages ended up following suit. All right, so Robinhood, it doesn't make Robinhood special in any way anymore. Like many newly traded public tech stocks, Hood is not yet profitable and burned $42 million in losses last quarter. All right, so that's definitely concerning. Is Robinhood stock a buy, sell, or hold? At recent prices, Hood is trading at a 5.1 multiple trailing and forward sales. Revenue growth is expected to be non-existent in 2022. Consensus estimates call for growth to return in 2023 and to continue after that. Wall Street analysts expect Hood to earn a 21 net margin by 2030. As we can see above, the stock presents a sustainable upside if the company can get its act together. I can see the stock trading at a 1.5 multiple price to earnings growth ratio in 2030. So needless to say, this is a long-term stock, a long-term hold, and there's a lot of risks involved at the same time. Also, they're kind of like a SoFi in a way. User growth among the younger generation after some period of stagnation. Hood's operating expense structure is just over $2 billion after excluding equity-based compensation. Even if revenues were to plummet 50%, Hood could theoretically fund losses for nearly 6 years before needing another cash infusion. On the flip side, so that's needless to say, Robinhood is not going to be going bankrupt or out of business anytime soon. On the flip side, if Hood can quickly right the ship, then I expect 68% net cash position to lead to a quick re-rating higher, as the company would always have a share repurchasing program available at its disposal. While I acknowledge that Hood presents a greater probability of failure than my typical picks, my view is that the current stock price is pricing in too much pessimism, and that the market is failing to appreciate the margin of safety provided by the large net cash position. I rate shares a buy, but note that portion size should be smaller due to the real risk that user growth does not return as expected. So that was a great summary on Robinhood and kind of expectations moving forward, the risks on Robinhood and everything in between. If you appreciate these kind of videos, make sure you leave a thumbs up. That's all I ask for. Comment below what you guys want to see next. If you want to get on my close friends list, go ahead and message me on Instagram. I'll shoot you over my website so you can check out everything on my website, see what you're going to be learning, what is included, and everything in between. If you want to see some success that students have been having, click on success number 5. That's the most recent one, up 57% from a call, up 80% on a Verizon call. And if you want to go back, you can even go to success number 4, success number 3, success number 2. There's over 500 positive testimonials now on the highlights section of my Instagram with positive feedback from students that have made money with my program. So if you're a beginner trader and you want to become a more advanced trader, just shoot me a message here on Instagram, The Daily Stock Market, and I'll take care of you. All right, guys, I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.